Hello traders, the title of the video is how to use Fibonacci extension like never seen before in the financial market. All right, let's get started. All right, we want to apply the Fibonacci extension as the price is progressing. All right. So very often traders do not get into the habit to apply the Fibonacci extensions like never seen before, as I'm going to do it on this chart today. So from today, you can also start applying the Fibonacci extension, in that manner. All right. So the price went up from here. You see here from this point here. You don't want the video to be too long, so it went up from here to here. Right? So what we need to do as the price goes up from here to here and start changing direction, we apply the Fibonacci extension and we highlight the 138.2% Fibonacci extension level. So we draw that line there and then we just leave it there. We leave it there. We don't want to forget it, and we leave it there. All right. Okay. Now, price went down. From here to here. All right. The 138.2% Fibonacci extension level is somewhere down here. Well, we can't see it on this monthly chart. Let's go to the quarterly chart. Hopefully we can see that 138 is not showing also on the quarterly chart. Let's go to the yearly chart. It's not showing, so we leave it. Okay, we can't see it, we leave it. All right, go back again to the monthly chart. Okay, so now the price went up. So it went up. You may see all the way here, see here, all the way up here. All right, our 138.2% is almost equal to our previous 138.2% level. All right, so we can draw that line and leave it there. Because it's quite close to it, I won't give it any color now. I'll leave it just there. But some traders may put it here. Remember what I said before, that not all traders draw their Fibonacci extension level the same way. So anytime you are dealing with Fibonacci retracement, Fibonacci extension, just understand that other traders may draw their Fibonacci extensions or retracement in a different manner. All right, so here it is. So I'm going to the mind of those traders, and their 138.2% Fibonacci extension level from here to here is somewhere here. I'll leave those lines on my chart. All right. Other traders may put it at the closing price. So here it is. Let's play with it a bit. And their 138.2% is right here. You can see the reason why I'm drawing those lines is because there is a big difference between each of those lines. So if they were quite close, I may ignore them. But you can see that there is a space between those lines. Just drawing a Fibonacci extension from here, from different point to different point, from the high to the low, from the closing price to the closing price, and so on and so on. All right. Let's continue to draw our Fibonacci extension like never seen before. At this time, the price was going down, so the first reaction, so price went up from here to here. So the only time that we can draw that Fibonacci extension level is when the price starts changing direction here. We cannot draw that Fibonacci extension if the price is not changing direction. So here you can see start changing direction. Now we are ready to draw that Fibonacci extension level. Here it is when it went up from here to here. Now that line, we need to know where is that 138.2% level. We draw it and we leave it there. Why? Because we will be looking for trading opportunity on here, one of those key levels. That's what we are doing. Right, so you may say to me, George, you already talked about this. Why are you talking about it now? Because it's so important, and I want to highlight it. Very, very important point for traders, so they may start applying their Fibonacci extension like never seen before. So you may say, George, that's it, I'm off. I don't want to watch the full length for this tutorial. I will say to you, stay with us and watch the full length for this tutorial. All right. So here we draw it is here. Okay, now look, it's becoming very interesting now. That's why I say to you to stay with us. Look at this move, because this is quite a long move all the way up here. See here, it's quite a long move, long up move. All right, that's why it becomes very interesting when you apply the Fibonacci extension like this. So you will see the power of using the Fibonacci extension like never seen before. So price went up from here to here. All right, where is that 138.2% level? Here it is. I'm going to color it now into pink, so we monitor. So we will be monitoring the reaction of the price. So price went up from here to here. It start changing direction. Then we can apply the Fibonacci extension. Right. As it start going up, we know that there will be a kind of reaction here. One thing I need to say to traders, when the 138.2% Fibonacci extension is corresponding, is coinciding with a prior resistance level. So you see, we apply the Fibonacci extension of this price action from here. From here to here, that 138.2% Fibonacci extension level is corresponding to a prior resistance level. This one here. If you see that, you need to pay attention to that 138.2% level because it's coinciding with a prior resistance level. So there is a high chance that when the price reaches that level, as trader did sell it before here, the first intention will be to sell. But also, those Fibonacci traders that are trading around the 138.2% level, okay, will be also joining those who have sold it here before, creating what we call a conversion point. So this is what's happening here. So now that this price went up from here to here, you draw your Fibonacci extension, start going up. If you buy here as a swing trader, you know that there's a resistance here, and you want to cash out, you want to secure your gain, you want to manage your trade carefully. If you see sellers here, you know that okay, you want to be part of it and also sell. As here, price going down, price looking for a better support level. Don't ignore the support below. Don't sell into a support level. Don't be the last person selling. Don't be the last person buying into a resistance level. So here it is. From here to here, we have finished with that. So you see, price continued to go out. Now it went up to form this high. So from here, we will say from here all the way up here. Okay. So this is why it's becoming more, very, very powerful as the price progressing. We just keep doing this thing. So now from the beginning again, to this point here, it starts changing direction. We apply our Fibonacci extension. Where is that 138.2% level? Is coinciding with another one. You see, can you see 138.2%? That's it. It's coinciding to another key level that we have, another 138.2% level that we have drawn before. You remember this line was withdrawn before. So now that we apply the Fibonacci extension from the move from here to here, is coinciding exactly to the prior 138.2% level, also to a prior resistance level. So this becomes a very interesting, so to speak, a very interesting 138.2% Fibonacci extension level, that green line. Why? Because is equal to a previous 138.2% level, is also equal to a prior resistance level. We need to monitor the reaction of the price there. So price pull back here, start going up. Look, as it come near that green line, did you see any reaction? Yes, people sold it. These are small market trading like a pro. Went back again from a double top, they sold it again. Here it is. You can see why the price peels through it carefully here, because they know that there are sellers here. They don't want to delay the move up anymore. So they say, guys, let's bring it far away from that zone. Otherwise, we're going to stuck here for days consolidating. Pew. They bring it away like a rugby game. They push it far away from that green line. If it did, this is what usually happens. If it slowed down a bit, it's going to the mind of sellers. Seller will come again and sell again because of that resistance there. So will you agree with me with the first time, all right, in your life that by using a Fibonacci extension like never seen before will be useful for us? We haven't finished yet. So now another trader may say, John, why don't you, so this is a question trader may ask, why do you put it here? Can you put it here also? Because it pull back, it start going up. Yes, you can. You can also put it here, from here to here. And the 138.2% level, you see here, on the dot. See, on the dot. On the dot. Those candles about this stop on the dot there. You can do that. You can draw that line also and leave it on your chart. See, that's the dotted line below the gray line. See here? Beautiful, isn't it? So now price start running away. You say, all right. So now it went up again to display a new higher high. Okay, anytime the price display new higher high, start pulling back. We pull out our Fibonacci extension and we draw it. Here again, so we say from the beginning again to this new higher high, start pulling back. Where is that 138.2% level? Look at that. It's coinciding again to a prior key level, a prior 138.2% level. You remember this level? We have drawn it before. Now our new 138.2% level is coinciding with a prior 138.2% level. So we just draw it and leave it there. So because it's coinciding with another key level, we want to keep our eyes on it and monitor it, knowing that it's a high impact key level. So far, the price did not retest it. It's a breakthrough. We leave it there. Leave it there. Just leave it there. So you may say, oh, George, why don't you put it like this, George? Oh, you stupid boy, why don't you put it like this from here to here? Can we do that? Yes, you can. Well, you can do that. You can do it like this. Your 138.2% is also coinciding with the green line. Here it is. It's all there in the pudding, so to speak. All right? You're not missing anything. You see the power of 138.2% Fibonacci extension trading as the price progressing. So we can also put it all the way from the beginning, as I show you here, to the new high. Here it is. Coinciding, as I showed you before, is there, the orange line. Now it went up again, display a new high, start pulling back. Then we can apply our Fibonacci extension from the beginning all the way to the top here. And where is 138.2%? You see, it's quite big, almost equal to another 138.2% level. You see that line, the black line, just below it. Am I talking to myself? Just below it. You see, below the black line, all right? There's another dotted red line. That's the 138.2% level that we have drawn. So we can just say it's almost equal to another 138.2% level. So we have all those lines, this line here and the dotted line there before the price even reaches that zone. See the reaction, price coming to this zone, people start selling. You see, that's the shadow here. People say, oh, no, we are in resistance, oh, blah, blah, blah. As the price breaks above those key Fibonacci extension level, where it did find a support in that zone. Break above and retest. That's what the price doing all the time. Break above and retest. Pew. Alright. So price from a new higher high followed by a higher low. So after those, you see this one, pew, it's quite volatile, long candlestick bar, followed by a smaller one that stay in the range of the long bearish candlestick bar. We will start thinking of a bullish harami. Here it is, stay in the range. We manage it carefully. Here it is, a bullish trading setup. After this one is closed and this one also is closed. Now we are combining a candlestick pattern with a price structure, breakable, retest. Now, after those two candlestick bars close, we implement a top-down trading method. You see the third candlestick bar did not go up straight away. See, pull back again. That's why we use a top-down trading method to control the trade. Don't just buy. All right. Here it is, and then it went up. Now people are taking profit. Why are they taking profit there? Let's continue our Fibonacci extension drawing. So we put it all the way here. We can also say, all right, Joy, why don't you put it here? Can we do it like this? After that pull back, we can do it like this. So we pull back, start going. Now we can do it like this. Where is our 138.2% level? Coinciding again with the orange line. So we have it already there. All right. And so on. So you may say, Joe, can we bring it all the way here? Yes, we can. All the way here, we can. So we can say from here, it went up, it formed a higher low, yes or no. So we can put it here, even here. We were doing it here, we can put it here. So where is our 138.2% level? Here it is, in the same zone of the red line, the dark line, that zone. That's why, you can see that's why a lot of traders that were selling here, probably they were not aware of other key level here. So they say, all right, bring it to the highest point, bring it to the highest point. And they bring it to the highest point in the zone of $40, the highest resistance level, because then we have a cluster of resistance here of key level. And now we brought it to the highest level, pierced through it a bit before they sold it now. All right? So you may say, oh, George, can we do it again like this? Okay. Here we are. It's going up, isn't it? So it went up from here to here. Where it's a 138.2% level. We have a new one here, uncharted territory, in the zone of $50. But we know also that other trader may not draw it as we did. So we put it to the closing price also to go into the mind of other traders. Because we don't want to miss anything. We want to know where are those key levels. So our first 138.2% level, drawing it from the low to the high, is this line here. By going to the mind of other traders from the closing price, okay, to the opening price, here it is. We have a new 138.2% Fibonacci extension level, and we just leave them there. Why? Because it's our chart. We can draw line on our chart, we can leave them there, and now you understand why I say I don't want to remove my line. And you say, Joe, you stupid boy, you have too many lines, remove some of them. All right, you see that? Okay. All right. So this is what's going on in the financial market. Okay, mapping out the chart with the Fibonacci extension, drawing a Fibonacci extension, or using a Fibonacci extension like never seen before. And in fact, you need to understand what's going on in the financial market, because there are a lot of trading robot, trading software, algorithms, trading algorithms, speed traders, that the machines that are trading the financial market, the trading computers, can draw all these lines already. Anytime they see goes up, pull back, all these lines already there on the chart. The computer will make decisions, the high frequency traders, okay, the automated traders, okay, decisions are made around those Fibonacci extension level. And if you are looking for reversal, a quick profit for swing trading and position trading, use the 138.2% Fibonacci extension level. For traders that are very, very new to us, who never, okay, listen to a funny asset like mine before, all right, if you want to know more about the 138.2% Fibonacci extension level, go to www.dayprotrader.com, click on the web page that we title the 138.2% Fibonacci extension level. Another thing that you can do is to YouTube search a playlist about 138.2% Fibonacci extension level. So you go on YouTube, you say, we put in 138.2% Fibonacci extension playlist video by Day Pro Traders YouTube channel. And you will start watching videos and listening to my funny accent. All right. So this will conclude our discussion today about how to use Fibonacci extensions like never seen before in the financial market. So I was using it on the monthly chart. We can use it on the hourly time frame, on the 2-hour time frame, on the 30-minute time frame, on the 50-minute time frame, as I did now, whether you are scalping, day trading, swing trading, all right? But the purpose of using the Fibonacci extension like this is to find a high probability trading setup on or near those Fibonacci extension level. So we draw them, we leave them there, and if we see a trading setup, a candlestick pattern, a chart pattern, okay, a reaction which may probably finding it difficult to break above that level or probably consolidating around that level, we know that this is a key level. We can now implement a different time frame trading method, a top-down trading method, a multiple time frame trading method to control the risk. Never buy or sell just because of the trading setup. All right, because sometimes you may have a trading setup, but there won't be any signal. Sometimes you may have this trading setup, the signal, but the risk will be high, and your entry will be useless, therefore, or the risk-reward ratio may be useless, therefore you leave it alone and look for another excellent trading opportunity. As always, if this is the first time you come across a video like this, and you say, George, this is great, I like it, please use a demo account, practice, all right? Just practice, all right? Until you must lock yourself in a room, practice until you master it. You understand everything. You will face different challenges. You will come across a different variation of what I'm talking about here. If you have any question, okay, put in the comment section. We'll record another video to answer your specific question. You polish it until you master it before going live. As always, if you have any question or suggestion, put in the comment section. I always read the comment, and in due course, I will record another video to answer your specific question. If you find this video truly useful, let us know by giving us the thumbs up. If you think that this is another ridiculous, funny accent, blah, 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 by George, okay, mark it down. Okay, that will put me under pressure to improve my next recording. However, if you think this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to use Fibonacci extension like never seen before in the financial market. Happy trading to you all and speak to you soon.